diamonds being out in the market. So I invested in Leanne in 2015 and De Beers and a number of players in the diamond industry are now working together to create this end-to-end mine to retailer tracking of diamonds.
What do you look for in investments? What's your focus?
So in 2013, it was very different, where there was very little technology that was built out, and it was really, truly about the entrepreneur and the passion the entrepreneur had around the sector. Because a lot of people forget, I mean, we have 8,000 people at this conference right now. I spoke at the first consensus conference in 2015. I think there were 200 or 300 people there. There was a big crypto winter from 2014 to last year, basically. And so I really wanted to invest in entrepreneurs that were passionate about the space, who saw that longer term vision and were resilient and could attract other entrepreneurs and team members that were equally resilient. And now what I'm really excited about, and I saw this happen in the early internet days too, in the mid-90s when I was investing there, you start to slowly see talent from all different sectors. So Wall Street, media industry, healthcare, starting to get into the sector, decide to either advise these companies or start companies or invest in companies where they have domain expertise. And then I think we're going to keep seeing acceleration now of adoption over the next few years.
And so it's not so much about the technology, but how the technology fits in.
Well, there's a lot of technology development that still needs to happen. And I think sometimes we're getting caught up in the hype these days of blockchain can solve the world. There's some pretty funny Dilbert cartoons out there on the topic. And so it's gone from, people think dismissing it completely to it's going to solve all the world's problems. Now, just like with the internet, 1994, it was clunky, it was slow. I remember bankers I worked with said they were never going to use email because they could just pick up the phone and call someone. So we're in that stage of there is scalability issues. There's a lot that still needs to be built out, but I think it's going to be built up on a much faster basis than what we saw happen, in the mid-90s with the internet.
Catherine, you also were investing back in the internet bubble. I mean, how is this compared to that?
So we've done a lot of sizing of bubbles and sizing of asset classes and when they pass certain milestones as a percent of the global economy. So to give you a frame of reference here, the internet bubble at its peak, the equities comprising the internet bubble were 6% of global GDP. So that we had never seen anything like that. At its peak last year, the crypto asset ecosystem was at about 0.8% of GDP. So although it may have felt like we were in the internet bubble, we weren't. And in fact, the way we subscribe to Carlotta Perez's view of the world, we think this will be a 50-year S-curve. And we are in the very earliest stages of what we would call the frenzy stage, which can last a long time. So to give you a sense of that, the internet bubble, the frenzy stage was the late 90s. Now, 10, 15, 20 years later, it's really happening, the ramifications of it. We are still in the very early stages of the frenzy here. And, that can go a long way. So wouldn't want to dismiss it with that word frenzy. It's a very important time for capital to be flowing in and enabling all of the opportunities that we're talking about here.
A constructive frenzy.
Yes.
Carlotta, your investment philosophy, tell us a bit about that, and what criteria do you look for in investments?
So when we initially started, we were one of the first sort of like a VC hedge fund, because we were looking at directly going into tokens, equities, but also creating a very innovative term sheets of mapping into companies. as we are going very early on, it's pre-seed seed stage. We don't even know if these companies are going to go tokens after 6 months or an year. And what we are investing into, what's really going to have a value, is equity going to have a value or is tokens going to have value? And if tokens going to have values, will SEC allow us to hold those tokens as an investor? So there are like so much unknown in this space. This is like a wild, wild west. It's an interesting wild, wild west. We need to figure out how to do it. So with my background of capital markets, I used to trade at IFC World Bank floor and then created the green bonds. So creating derivative products, investing in them, and then doing a lot of investments in equity, we came up with this very innovative way of investing where we go early and we put down a different way of token monetization and work with the companies to say whatever is going to be a valuable part at the end of 4 years or 5 years when we are actually going to liquidate, we're going to map our returns based on that. And while we are building that up, we also started dividing and doing a different valuation model of tokens. Because today, if you have a non-fungible token and you have governance token and then you have utility tokens, their market effect with respect to how people are using, but their market value with respect to how investors are investing, and returns should be mapped are completely different. So building up those models, I think, has been a very change from it's a bubble that just throw some money and let's see, we will have 100x return and let's what comes back, to having a very quantified data-oriented approach of creating a whole valuation model, different for the investors and different for how SEC is going to see it and how on the accounting we're going to report it. And when we start going deeper into it, we saw two trends. The first, within last 1 year, lot of entrepreneurs, lot of serial entrepreneurs, lot of big, amazing product people from some of the biggest traditional companies have started coming into the space. So they now know how to build companies. They may not know everything about how to use blockchain technologies on it, but thank God the ecosystem has grown so much. You have amazing engineers to support them. And on the other side, we started seeing pure technologists around the world. Places in Australia, places in Europe, places in India and Africa, where you won't have an infrastructure of Google and Uber for them to join, but because of the decentralized economy, decentralized technology, they are building some of the biggest next generation solutions.
Fewer barriers.
So how do we reach those tier cities which are actually giving us the biggest security solution out of Africa? Because that's what they have lived with respect to technology. They know the solution. They can immediately pick it up. So how to pull them into this main system of San Francisco and Silicon Valley bubble, and at the same time creating a very data-centric approach to value so that more and more Wall Street turns around and see that this is just not a bubble. There is a lot of data analytics behind.
And applying the discipline to the investment approach was a refreshing approach to the sector. Catherine, you also work out of models. You are known for your data crunching. You're known for your reports. Can you tell us briefly about the other technology sectors that you're looking at and how blockchain, Bitcoin fits into that context?
Sure. So the 5 general purpose technology platforms that are evolving today are genomic sequencing, robotics and automation, energy storage, so battery technology, the wholesale shift of transportation to the grid, next generation internet, which is really all about artificial intelligence, deep learning, and then blockchain technology. What's really wonderful in terms of being able to invest in all of these is there's convergence among them. And so our analyst responsibilities are not broken out by sector, the sort of siloed sector specialized approach. Our analysts are all comfortable with technology. They're all looking at the ramifications of blockchain technology for their particular platform. So supply chain management, a very big one in terms of blockchain technology and our industrial innovation strategy. We're seeing the convergence of healthcare, the genomic space, artificial intelligence. Almost everything that we are touching, blockchain will touch as well. It's the convergence that I think the internet really set off is really happening now.
Kavita, you mentioned earlier the type of tokens that you look at. You invest in equity and tokens,
Yes.
Is that right? How do you see that mix melding going forward?
Yeah, so I would lie if I know that I have understood this holy grail. I haven't. I think it's changing, right? Like 3 months back, non-fungible, 4 months back, non-fungible tokens did not even exist. So having that asset type and thinking how to do valuation was like almost impossible to do. So we invested in a company, Dada, and we did not even know that they could actually go into this new sort of tokens which for art collectible makes sense. So our whole valuation model for that company changed. But what we have started realizing is let's go back on the macro and have all the options inbuilt instead of being hungover like on one thing. So we want to really respect the ethos of why token economics came, so that in this decentralized work, all the decentralized entrepreneurs don't have to just go up and down on Sand Hill Road to raise money. They can be anywhere and sort of a crowdsourcing can happen. But at the same time, how to put governance and transparency in it? How do we create milestone? If you need to build an MVP, you don't need $100 million in your bank account today to build that MVP. How do we pull out a milestone-oriented approach in this ecosystem? And that's what we are going. When we go in investments, we are like, if we are doing tokens, you have to tell us, irrespective of your market cap, how much do you really need to build this MVP? What are going to be a milestone over the next 3 months or 6 months? And are you ready to include that in your white paper? Or nowadays they have started calling it yellow paper and put it on your website. If yes, then there is something you are ready to be responsible for. And the rest of the amount, even if you raise $50 million, are you ready to put it in escrow to have that sort of accountability to people who have never met you and probably going and investing on the diligence which we have done on our branding? So putting a lot of that traditional value system in it.
And it comes down to the discipline, you said, which again, is something that's changing so fast and has so many unknowns. Must be really quite hard to do. Jalek, you invest in equity mainly. Do you also
Mainly
invest
equity.
in something?
But my take is very different in that I view even the token segment to be very similar to venture capital, at least where it is now. I mean, I was an investment banker once upon a time back in the mid-90s, early 90s, and we built these valuation models. I don't think there are valuation models that you can put together for tokens, partly because a lot of them are not out in the wild, other than maybe trading. The use cases are not really that developed yet. So I view, so we do, our first fund was all equity. The second fund, we're doing primarily equity. We have an allocation for tokens if, we think it makes sense for the business model for the company to issue tokens. So we will do some token investing. But what I found is that they're still so early stage that you have to evaluate these companies as if they're a venture deal, and then which means it goes back to milestones, team, what are they going to build out, when?
Not to mention hard caps.
Pardon?
Not to mention hard caps.
Yeah. And then I also think that a lot of companies that were thinking of doing tokens are now backtracking from that, because while I do believe in a tokenized world, down the road, I think we're not quite there yet on that front, and companies still are going to need smart investors around them to build out their technology, help them recruit, kind of all the functions that VCs have been doing for years. And then I think a lot of them will go out once the token market is more mature, or if there's more regulatory certainty, will go out and issue tokens. And that's how I see things having changed over last year, when there was just a rush to issue tokens.
The two worlds supporting each other.
Yeah.
Catherine, your funds are largely ETFs, if I'm not mistaken, both actively managed and passive. So your investments have to be in listed companies or other traded vehicles. There are not a lot of listed Bitcoin opportunities at the moment. Do you see that changing?
Yes, I do. I mean, our regulators have to get their acts together, really. We think we were happy to see the SEC and the CFTC, in testimony, getting it more and more. But I think what's really interesting about what's going on from a regulatory point of view is that I don't think the regulators want to be blamed for preventing innovation in the United States. After all, regulators in other parts of the world are much more friendly. So we're going to see, I think, regulation mainly by, it's almost prosecution. If they see fraud, there'll be some rulemaking around that. And that's how we're going to find our way towards. I really do want them to delineate, okay, this is a security, this is a commodity. They've said Bitcoin is a commodity. And for that reason, it generates in our funds unqualified income, not illegal, but unqualified income. Only 10% of gross profits in our fund can be unqualified income. Otherwise, the IRS confiscates all the gains. So we have to be very careful. And so we're looking forward to more securities coming, designated as securities so that we can invest in them.
So given that 10% limit, I mean, I imagine that you check the Bitcoin price like everyone. Let's do a quick audience poll. Who here has checked the Bitcoin price at least once so far today? Okay, so almost everyone in that case. Does the Bitcoin price, you're a longer term investor, but has the Bitcoin price movement so far this year influenced your weightings or your strategy?
Well, we took our position down in early January fairly dramatically. Still, we consider it a core part of the portfolio, but it had appreciated to 10%, and we cannot hold more than 10%. So we had to take it down to 1.5. What caused us difficulty in terms of unqualified income were the forks. The forks in GBTC, they were distributed as cash. We would have liked to have held them if we could have and not have incurred unqualified income. So that's really what happened. I also wanted to make one point, a little bit of a follow-on from before. What we are witnessing with the convergence of these platforms is there is a very strong deflationary undercurrent taking place in the economy, and it's not bad deflation. This is very good. The whole blockchain world is going to push us further and further into declining costs, and we think explosive unit demand, and we are very much looking forward to distributed digital services trading on exchanges so that the digital economy can start being measured. Right now, the economy is only measured based on in statistics derived during the industrial age. We are missing a lot of economic activity in the digital world, and the digital world is more important than copper to some of us, right? So we're looking forward to, again, very early stage, but whether it's storage, computing power, supercomputing power, bandwidth, those are not being measured properly, and they're very deflationary in their impact, but then generating explosive unit growth. So we're looking forward to this market, these instruments being brought into the market and others understanding how deflationary and they are and how explosive the growth because of them will be.
And it speaks to the difficulties of valuation that we've already...
And regulation.
Exactly, we've already touched on. Now, one thing you mentioned earlier, Catherine, which I'd like to also pull on a bit, is the regulation. Gafita, where do you see ICO regulation going?
I hope positively. I think this is a market which SEC, the good part is SEC has finally accepted that this is something they have to take it seriously. They have to get in a lot of experts, hire them, understand the market, and have some clear guidelines. Everyone, I think, if not everyone, 99% of the people out here wants to be in this industry in a very legal manner and wants to have a clear guidelines and the legal regulations how to go about it. But I hope SEC moves way faster than how they are doing, because if every 2 months, what we have done in the back even though we thought at that time was completely SEC regulated, is now probably in the gray area, then I am not sure how, as a mainstream investor, we keep on changing the way we are investing in companies. So for an example, when we started doing a lot of utility tokens, because we do see, for us, we are building the company, we are providing a lot of advisory services. I'm not saying that a lot of people did try to do the tweets and like a lot of media attention just for the advisory services, but then there are legitimate accounts with the branding like Consensus. Said that 2 months down the road today, now there is a gray area whether if investor invest in utility tokens, are those utility tokens or they become security tokens for investors? And what are the right way of regulating them or paying taxes? We don't know it yet. So those sort of changes keep on putting a question mark in the industry, but this is an industry which is pretty legitimized today, as you can see. So the faster SEC moves, the faster it will be for the business to stay in the United States in the right manner.
And that will affect development going forward, not just locally, but also globally, I imagine.
It does.
Jalak, on the regulation front, the increasing scrutiny, I guess, worldwide in this, do you see it changing the entrepreneurs' behavior? How have entrepreneurs changed over the past 12, 14 months?
Oh, yeah, it's been a huge change over the last 12 months. I mean, I remember this week last year was when, things really started to take off. Japan had just positively ruled on Bitcoin being allowed to be used as a currency, and that was kind of the first spark that created the big run-up, and then companies just started ICOing like crazy, and it was in a regulatory vacuum. And so it reminded me of 1999, Silicon Valley. Let's IPO as quickly as we can before they find out that we have no profits or, we have no business plan. But this was, I'd say, on steroids, because this is also the first really global tech revolution we have seen. So it was just this massive, rush to ICO, scams left and right. Companies that set out to raise 20 million raised 200 million, and then the regulators caught wind of what was happening, and I think they rightly reined it in. In my perfect world, the industry would have self-regulated, but they didn't. So we ended up with worldwide regulators starting to pay attention. And so there is a lot more attention on the part of the entrepreneur being paid to, how do we do a compliant token offering? I just invested in a company called Harbor that's out in the Valley, and they're building in compliance into token offerings through smart contracts. So, I believe we're also going to have technology solutions to compliance, just like we did with, Web 2.0 compliance. So it's going to be a mixture of the tech solutions as well as the rulings, and I think it's imperative that the industry works with regulators to make sure that they understand all the positive implications of the technology, while also shutting down the bad behavior, because we don't want to see that happen.
Yeah, but I do think the self-regulation has happened very beautifully. No one comes and say, I'm going to raise $100 million tomorrow. Even some of the best projects which we're looking at are very smart. They're like, let's take equity, let's build MVP, let's launch tokens after that when we have a product to show and the utility to show, and let's go for $5 million to $20 million with like 10% of the tokens. So this new model.
Yeah, and that's very new. I'd say that's a 2018 phenomenon. That wasn't happening in 2017.
So interesting to see what it's like this time next year. Catherine, you work in a very heavily regulated segment of the investment space. How do you see, looking from above, the trends in digital token regulation? And do you think they will ever have the same standing as securities?
The equity markets really were invented in the 1600s, and there has not been much progress since then. So this could be the next stage of securitization in our industry. I'm actually pretty excited about it. It will be the monetization and capitalization of information networks. I mean, the equity markets are all about information networks. So I think there's a huge future here. I do think that there was too much capital pushed too soon towards too few opportunities, as you say. So we will see a shakeout. And I think in terms of venture capital funds, venture capital expertise, this is a good moment for them. There's a lot of seed money out there. These are seed money efforts, and they can bring their expertise and perspective to that. I do think, though, that it's going to shake out from a VC point of view, much like the traditional VC world has shaken out, and that is there aren't going to be very many really successful venture capital funds. That's why, I mean, we have, because Chris Berniske started at ARC, I'm watching Placeholder, and I think they're doing this in a really smart way with governance, back to regulation, governance as the #1 criterion. We learned a lot of lessons from the lack of governance in 2017.
And that's where the self-regulation comes in. Can you envisage one day in the not too distant future a token ETF, perhaps?
Yes, a token ETF, I can. I mean, they'll have to be, so ETFs are 40 Act funds, SEC regulated, and they'll have to be securities. Right now, we're a little bit in Never Never Land, which are securities and which aren't. I mean, the SEC says most ICOs are securities, and yet they haven't delineated them one by one. So we're in a lot of gray area right now, and GBTC was an investment, a grantor investment trust. That's a security. We're able to do that. We know Grayscale has others on the way, and we will be able to do those. But then again, we face the unqualified income issue. We'd much prefer to invest in ICOs as securities and as SEC designated securities.
Do you see digital tokens, initial coin offerings, as a threat to initial public offerings, IPOs?
As I said, this is an evolution. Yes, I can see this is a different way of capitalizing, right, and monetizing. So yes, and with time, given great governance, this could supersede a lot of what goes on in the equity markets.
Actually, I want to add on this. Even a lot of companies which have already been IPO'd, we are seeing a whole transition where they want to create. Let's say if you have a company which has 6 different business lines and you overall have been already IPO'd, they're taking an individual business line, creating a new joint venture, and then can be used for that service without affecting the stock price of the parent company through IPO. So